Hello, my dear students. Though we've already started with forfeiture of shares and discussion regarding its various treatments and journal entries in the class, but I would further like to explain a few illustrations over here so that when you relate back to this particular audio, while you're practicing your sums or you're solving unsolved sums of the exercises, I think the explanation will help you to understand the detailing of the calculations involved. Right. So I would want you to refer to page number 7.65. This is illustration number 37. Vrindavan Limited issued 50,000 equity shares of rupees 10 each, payable as follows: 2 application, 3 allotment, 3 on first call, and the second and the final call 2 rupees. Now X was allotted, or whatever the name of the shareholder is in your problem, he was allotted 400 shares, and you're supposed to draft the journal entries in 3 different cases. The first case says that if the shareholder failed to pay the allotment money and his shares were forfeited. So you have to understand that the first installment was already paid. Now, first installment paid means that the shareholders have already paid rupees 2 for application, and the others he has not paid still, right? He's failed. So we will have to see that what should be cancelled, what amount of share capital should be cancelled. Company has called up to a value of rupees 5. So 400 equity shares of rupees 5, that stands cancelled as share capital. And against that, you will be cancelling first the calls in area that you had made due. That is the allotment installment, that is 3 rupees for 400 shares. And finally, the net gain already what the company has, just because it kept back that entire money received, that is 2 forfeited shares, 400 equity shares of rupees 2 each. Then the second situation, it says that if the shareholder fails to pay the allotment money and on his subsequent failure to pay the first call, his shares were forfeited. So right after the first call only, the company forfeited the shares. Now, if it has waited till the first call and then forfeited, that means still rupees 8 the company has called up the value of the shares, because 2 of application, 3 of allotment, and 3 of first call. That's the reason why under the second case you will find share capital has been debited with 400 equity shares of rupees 8 each. And I think I told you the breakup of that rupees 8 is equals to 2 rupees plus 3 rupees plus 3 rupees, right? Calls in area would be allotment and call taken together, so it is 3 plus 3, and then forfeited shares will be the gain that has already happened for the shareholder's money, which the company is not refunding back anymore. That's 2 rupees against the application that it has already received. And the final situation is, and that's the reason why it is share capital account debit, 2 forfeited shares, 2 calls in area. Share capital with the third case is that if that shareholder is supposed to pay the first call, on his subsequent failure to pay the second call, his shares were forfeited. Now, because he failed to pay the first call, the second call was also failed. So obviously it is necessary that the company must have called for all 4 installments. That's the reason why against share capital, the transfer of money that would happen is rupees 10 against 400 equity shares. Calls in area as usual for the first call and the second call, that's coming to rupees 5, because those are valued at 3 rupees and 2 rupees. And finally, 2 forfeited shares, it would be 400 equity shares of rupees 5. They've already written the explanation in detail. I have discussed with you the calculations of these shares. Please go through the sum. Then also, if it is difficult for you to understand or solve it without seeing, we will further take up the discussion in class. Next, I want you to refer to an important problem on page number 7.72. This is an ISC standard problem. If you can see, it is the modified version of ISC question that came in 2011. In 2010, Ganga Limited was registered with an authorized capital of 1 lakh equity shares of rupees 10 each. So that gives us the calculation of 10,000 equity shares. 4,000 equity shares were issued, fully paid up to the vendors for the purchase of plant and machinery. Now, we've already done where issue of shares is done for consideration other than cash, isn't it? 6,000 shares were subscribed for public. So during the year, 6 rupees equity share was called up. So not the entire value was called up, 6 rupees per share was called up. 6,000 shares payable, rupees 3 on application, 1 for allotment, and 2 on the first call. Now let's see how are we supposed to work out with the sum. On 5,000 shares, the full amount called. So for the first 5,000, entire 5,000 was already called, right? Now we've done things with oversubscription and under subscription also. Now under oversubscription, the second alternative dealt with the adjustment of application money along with allotment. So that is pro rata. 600 shares, rupees 4 per share, 400 shares, rupees 3 per share. The company forfeited all those shares on which only rupees 3 had been received and reissued them at rupees 4 per share. We've also discussed about the reissue concept. So this sum is a combination of both of that. Rupees 6 called up. So reissued them at rupees 4 where rupees 6 has been called up already. We're supposed to journalize the transaction and prepare the calls in area account. First, let us see the journalized transactions. Now, for the first two entries, you will see they've passed the credit purchase entry of the plant and machinery against the vendor and then issued him 4,000 equity shares of rupees 10 each. Now starts with that application installment of that 6,000 shares. So first application receive journal entry, then transfer journal entry, both being 6,000 rupees into 6,000 equity shares into rupees 3 each. Next we've got equity share allotment and the included calls in area in it. So equity share allotment, first we have the transfer entry. At that point of time we don't know that what the calls in area would be, so we move on to the next one, which is bank account debit, calls in area account debit to equity share allotment account. So bank account debit, we can only put in the value that the company has received, whereas we see that there has been calls in area upon 400 equity shares of rupee 1 each installment, because see, allotment value is rupees 1, so 400 due, bank receives 5,600. Then you've got the first call transfer entry, as basic as that, 6,000 equity shares of rupees 2 each, so 12,000. Again there is a calls in area of 2,000 there, and what happens is that entire 1,000 shares, that 600 plus 400, that entire number of shares, that has a calls in area of rupees 2, so which is coming to 2,000. So the company decides to forfeit them. Now if the company is deciding to forfeit these 400 shares called up to a value of rupees 6, so obviously equity share capital account debit will be 400 equity shares into rupees 6, against which forfeited gain or forfeited shares money that has come into is 400 equity shares into rupees 3, so that's 1,200. And calls in area, the asset that you created so far, because you expected that you would be getting the money, you need to cancel that, so that is again 1,200 credited. Now these 400 shares are reissued at rupees 4, so bank account debit into rupees 4, so that's 1,600. Forfeited shares will be debited once again. That is, how are you going to adjust that loss that you're suffering? Because see, 6 rupees shares you are reissuing at rupees 4, so per share rupees 2 is my loss value, which I will be adjusting against the forfeited shares value that I've already earned. So 800 comes from there, and that getting adjusted again, 400 shares of rupees 486 called up, so credit being 2,400, and the net profit out of the entire transaction is 1,200 was forfeited value, of which you've already adjusted the loss of 800, so capital reserve will get 400 net gain, so the entry remains as forfeited shares account debit to capital reserve. If you compare all these journals and you post the corresponding effect in the calls in area account, you will find calls in area account has a closing balance of 1,200 rupees. Just the last one to discuss for today, reissue of forfeited shares. This is illustration number 43 on page number 7.75. Pure Products Limited issued 100 equity shares of or 100 shares of rupees 10 each at par, so at the nominal value, to X or whoever the shareholder is, on which he paid the application money 2 but failed to pay the allotment money of 3 and first call money of rupees 4. Second call rupee 1 was made. Before that was made, shares were forfeited, so now the entire value was not called up only. Therefore the company demanded the second call. And of course, you are required to pass the journal entries and the reissue entries if the forfeited shares are reissued fully at 3 different situations have been given, whether at rupees 8 or rupees 10 or rupees 12. So basically, the sum is only expecting you to draft the forfeiture and the reissue entries. Now, under situation number 1, when the reissue is made for rupees 8, let's see how it is beginning. So, you've called up the shares for rupees 9, so you'll cancel that share capital account debit rupees 9. Forfeited shares, you've only received application money of rupees 2, so that's your gain. 2 calls in area, 7 rupees is due. You pass that entry. Then, you have reissued them at rupees 8. So, first and foremost, first, bank will receive the money. Bank account debit rupees 8 into 100 equity shares. Forfeited shares, you will be transferring, adjusting that loss that you've already made. So 100 equity shares into 2, and then 2 share capital entire 10 rupees. Then after that, situation B, likewise the same journal entries you will be finding other than rupees 8. While reissue, bank account receives a debit of rupees 10 per share. So that is 100 shares of rupees 10 each. And situation C is 100 shares of rupees 12 each. The other entries remaining same, the other calculations remaining same. I think we've discussed quite important illustrations on forfeiture, reissue, and adjustment of forfeiture, where partly called up or fully called up. Further, we will be taking up more illustrations in the class, and will be clarifying any doubt whatsoever you have in these problems. Till then, please practice sums, and we'll continue in our class with the next topic. Thank you, everyone.